You owe your creditors. You don't have interest to pay. How does this look as you go out over time? So the business plan works out, things are looking pretty decent. Your indebtedness will keep going down. What's the next category then? Profitability ratios. What's the effect on your profitability? So we have 4 here. Gross profit margin. Operating profit margin. All right.
Yes.
What's the next one?
Net profit margin.
And no PAT. No PAT margin. So gross profit margin, what's the formula?
Sales minus cost of goods sold divided by 6.
Okay. So it's really your gross margin divided by your sales. Let's put it as a percentage. So what is that telling you? For every dollar you generate in sales, 20 cents goes to pay your suppliers, and you have 80 cents left back to cover other expenses. Operating profit margin, what's the formula?
EBIT divided by sales.
Okay, so it's EBIT divided by sales. For every dollar in sales, how much is left back after you've paid your cost of goods sold and your and all your other expenses? Only 13 cents. Huh? So you've given up quite a lot. For every dollar in sales, like 87 cents goes with depreciation, other admin expenses. Net profit margin.
Net income divided by sales.
Net income divided by sales. It's 12 cents. Probably about the same. Let's just define this. So again, what are these ratios trying to tell you? Gross profit margin. Operating profit. So it's nice to have sales. You can generate sales, but how much is left? How much of your revenue are you giving up in expenses? So gross profit margin, net profit margin could speak to like your pricing policy. Are you selling the goods too cheap? Is the selling price enough to cover the cost of replacing the goods, running the business, giving you? How well are you managing your various expenses? Are you buying your supplies from the best customer, from the best supplier? Are you getting the best price? Are you spending too much on transportation costs? How well are you managing your expenses? And no PAT margin, what is that formula? This probably doesn't make sense. That's why let's ignore him for now. So again, as your business plan plays out, notice what's the likely impact on your profitability. Profitability does not, the profitability ratio don't actually improve that much, huh? You are growing, but like your profit per unit of sales is only slightly improved. What do we have? Efficiency and return measures. Let's just see. Sleep at night come.
On our phones, sir.
Huh?
On our phones.
So we have sales to total assets. What else do we have? Operating return on assets. Return on assets, return on equity. Sales to total assets, what's our formula there? Sales divided by total assets. These are our revenues divided by our total assets.
See?
This is really a measure of your capacity to convert the investment in assets into sales. So you can think of it as input, output. What's the input? You make an investment in assets. Why do you have assets? What are they there for?
Generate sales.
To generate sales. So the higher that number, the better. You are getting more out of that. Operating return on assets. What's our formula there? EBIT divided by total assets. So again, similarly, for every dollar invested in assets, how much operating profit are you getting out of that? So converting the assets to sales is fine, but for investors, what might be even more important is to convert it to operating profit. Return on assets, so again, you're just refining that. It's EBIT, it says net income instead of EBIT. Converting the investment in assets into actual profits. So 47 cents. And your return on equity, which is the return for the shareholders. So again, it's your net income divided by your total assets. And again, our idea is we can copy this across. Huh?
Total equity, total assets. What did you say?
Like you, I've been going at it for 2 hours.
Okay. Shareholders equity.
I'm older than you, so
Yes. What is it?
84%. That's a pretty decent return. And again, in terms of assessing that, does that get better over time or worse with the growth? And interestingly, it's not getting a lot better. save that. Now, having done that hard work, so now you can put it together in a presentation for your banker. And then we can begin to play around. In a short time we have. So maybe we can quickly look now at, and your life should become a lot easier with the analysis, having put in that hard work. So scenario 2 should be easy to analyze. Additional rental space with no growth in unit demand. So what would we need to change? Because if you rent the additional space and Trump blows up the world and you get no growth, what happens to your predictions? So what happens if there's no growth? I think they give you that scenario there, right? What are the assumptions? No growth here, right? So 126, 869. So it stays at 126, 869. What does that do to our numbers? Our balance sheet still balances. But if you go ahead and you rent the space and the growth doesn't happen, what do we see happening there? So you have a big problem with cash, huh?
Yes.
So in 3 of the years, you're gonna have negative cash. I think we have an assumption about the cash, huh? Or something. So how does the owner try to manage herself? She only takes she only takes her salary if what? The dividends are only if cash remains at 50,000, right? So that's going to be violated here, right? So what does that mean for 2015? We're going to put that to 0. Okay. And also you can look at what happens to some of the ratios even before we do that. You know, liquidity gets really bad. So a lot of this, the cash conversion cycle looks like it remains the same. It's not really affected by that. Now your leverage gets really bad. Why is the leverage getting so bad? Because you start, if the growth doesn't happen and you rent the space, your profits begin to plummet. Huh? They would drop from 133 to 52 and then get negative. Now that's going to feed through to your equity. You know, the equity in the company actually goes negative, which means the company technically is bankrupt. That's the definition of it. That's one definition of bankruptcy, having negative equity. So a friend might try to manage that, because she doesn't take anything out of the business. What is that? So her balance sheet still balances. So her cash goes up to 130. So she doesn't take any money out. So again, this is where it can get interesting, because how much cash does she need to have before she takes? So maybe she might not take 175, she might take something less. We can play around. So if she doesn't take anything there, it improves the balance sheet. And so that's one way of managing that. And let's see what happens. Right? That's not going to change profitability really. But if she doesn't take any money out for 1 year, so that does help her. But still, there's a problem in 2016. Huh? Even with that, what's the problem in 2016? The cash is still less than 50,000. So it means our friend can't get anything there. So in a simple sense, what's the implication of making the investment? If she makes the investment and things don't play out, then she can't get anything out of the business for 2 years. Do you want to go ahead and make that investment if you are her? Can she survive for 2 years without taking this money out of the business? Can they survive? Well, she doesn't have a loan. So again, you can really simply I guess you can save this as scenario 2. Rent and no growth. Okay, so I'm going to stop there for today with this, and so part of your homework for next week is, I guess because I'll forget, let me do it now. I'm going to upload the spreadsheet. So what I would want you to do is to use the spreadsheet and analyze scenarios 3 and 4. And next class we discuss whether you recommend she goes ahead or not. Don't leave it. Bubble and leave scenario 1. What has happened on the financial markets since we met? Anybody been playing around in stock track? Anybody? No? Sorry? Yeah, the assignment and any playing around, what's happening? Okay, so I have uploaded these 2 sheets. We shall do this. Remember, if you use, again, so what you're being asked to do is to, so we've done scenario 1 and 2, right? So you're being asked to do for next week 3 and 4. What if they buy the building and there's 15% growth? What if they buy the building and there's no growth? So you would now have the numbers for the 4 scenarios. And we would want you to come to class prepared to discuss, should she take the loan? Again, your life should be not too hard. Because you should, so, scenario 3, purchase the building with 15% growth. How would you really try to do that quickly? So you already have this scenario of renting with 15% growth, right? You should really go through that spreadsheet and which assumptions would change. Obviously, some of the rent and fixed expense would change because you don't have the rent. You would have the building coming in. You would have new loans. You would have interest payments. So you would just work with that spreadsheet and you already have the ratios and things here. So once you play around with that, and then 15%, no growth, you could come back, but you could work with the same new sheet that you created. And what if there is no growth? And then be able to do a discussion. Okay, the financial markets, okay, another down day, so with the red. Since yesterday, pretty. So we say the markets are down. How are the markets doing? So when we refer, we use the term the markets. How do we assess that? We are looking at these broad indices for the most part. Huh? So you have the Dow Jones Index, that's a whole popular one, Dow Jones Industrial Average. Tracks 30 most influential stocks. S&P 500, much broader, tracks 500. And the NASDAQ, which tracks a lot of technology stocks, and they're now. So again, they're all down today. I guess good news is oil is down. That's always good for us. And so on. So again, what's going on there? Why are the markets down? So markets down implies what? You have more sellers than buyers. Investors are in, and the fact that these are broad indices, investors in general are getting rid of shares. They are selling. They want to take their money out of stocks. So they are being, so the stocks are generally selling at a lower price. Why might that be happening? There are a couple of things. So one very general thing is, so maybe not know what is happening there is what finance might call risk off trading. So what sometimes investors get very pessimistic, they get very uncertain. So whether people support Trump or not, they might be thinking, okay, we are accustomed to the global economy operating in a certain way. We now have a very powerful player operating in an unorthodox way, so we don't know what the hell is going to happen. We don't know what he's going to do next, how people are going to react. So how do you react in that way? As a normal human, when you are uncertain, what do? You take your cards off the table. You take your money off. So there's a flight to cash, or flight to safety. So people are taking their money out of risky assets because they're just more uncertain about the world, so they want to reduce their risk, and they're moving their money into safer assets, going back to cash, investing in things like gold and so on. Some specific stocks or sectors might be struggling. Car companies might be having a hard time in the US. People are not so sure how. But there's really no such thing as an American car if you take it from a business viewpoint. If a Ford car, let's say a Ford Jeep or pickup has 1,000 parts. The way production is structured, 300 of those parts might come from Mexico, 500 from Canada, 200 from the US, and they're all assembled in different places. How does that system work now with the uncertainty? People are really not very sure of how that would play out. A lot of stuff is happening with NVIDIA and the tech sector and so on. And if you sort of go on Star Trek, just take a quick look every day, after a while it will become a little bit of a habit. Sorry? I didn't hear that. All right, so 12 o'clock. Finish on time. Thank you for your time. Any questions, comments?
What class is the private?
What?
What class is the private?
I don't understand.
French tutorial. Is it?
This is the class. Where's it? What's going to be here? Oh, what classrooms?